Hey everyone, Dennis Caye here with Belize Real Estate. Just want to talk to you about a few more things financing related. I just posted a video just a few minutes ago on why the interest rates in Belize are higher than what we're used to in the US and Canada. So if you missed that video, please go ahead and rewatch that because that's got a lot of good information for you. But there's some other things too that I wanted to mention regarding seller financing and why it's superior to bank financing in Belize. Again, I mentioned that the local banks were like 40 to 50% down payment. Interest rates are 10.5 to 12%. Plus, you have to do other things. There's a pretty lengthy application process. Got to jump through a lot of hoops. The reason is the banks really don't want to take back a property. I mean, if you're in the U.S. and you happen to default on your home, your bank has a system or a way of dealing with homes that they foreclose on. All right, they don't like it either, but it's not as painful for them. In Belize, you have this, even if it's a beautiful home, somewhere in the country, the banks don't want to have to deal with that. It's a lot of hassle for them. So they require 40 to 50% down payment. They charge high interest rates, and they really do their due diligence to make sure you're absolutely qualified. A lot of the banks actually make you get a life insurance policy on yourself, connected with the loans, that if you die, the loan's paid off in full. They don't want the hassle, okay? So this is where seller financing really becomes attractive, because if you find a property where the seller is willing to become the bank, number one, there's no lengthy application process. Number two, there's no life insurance policy that you need to take out on yourself. Number three, the paperwork is extremely simple. All it is a 4-page document that spells out exactly the terms of the agreement, how much the property is sold for, what the down payment is, what the interest rate and monthly payments are, and then it has a couple clauses on what happens if there's a default. And that's it. 4 pages, extremely simple, makes it simple for the buyer and the seller. Now, the one thing I like about these loans too is that they're just a simple reducing balance loan. Using the example I just gave in my last video, you find a property for $55,000 US. You put 10% down, you're left with a balance of $49,500. Okay, so now each month you're just making a payment to the seller, and I forgot what the payment is on that. I guess it depends on how long the loan is for. Let's just say it's $500. So each month you're cutting a check, you're doing a bank-to-bank transfer of $500 to the seller, and at payoff, then everything is transferred to your name. Very, very simple. Okay, but what you can do is, let's say that throughout the year you often come into larger sums of money. So maybe you get a bonus from your work, or perhaps you have a little side hustle that generates some money at certain times of the year. So let's say one month, in addition to the $500 normal payment, you come up with another $1,000 or $2,000. Well, you just call up the seller and say, you know what, along with the original payment, the $500, I'm going to pay another $1,000 or $2,000. Please apply that directly to the principal, and then boom, just chunks down that loan. Also, there's no prepayment penalty. So you can have a loan set up where you think it's going to take you maybe 3, 5, 10 years to pay it off. But let's say you come into some money and you say, you know what, boom, I'm ready. I'm only 2 years into the agreement. I'm going to pay this thing off in full. I'm going to be done. So it's very, very easy to do. So that's why I really recommend you look for properties with seller financing. Now, more often than not, such properties will be vacant land deals. The reason being is that a person that owns a home or a condo, they may be willing to sell that with some financing, but there's also more risk involved to the seller. For example, if you take ownership of the home or condo and you put just a small amount of money down, what happens if you don't maintain the property properly, right? What happens if you allow it to get into disrepair? So the seller is more at risk with condos and homes. With vacant land, you can't really mess those up too bad. I mean, it's just vacant land. And here's another thing, because we just ran into this question yesterday. Some are asking, am I allowed to build on a piece of vacant land that is not paid off yet? The answer is yes, but with this caveat. The seller will let you build, but they want to see that you have enough funds in order to complete your project. And here's why. Let's say, like on this $55,000 lot that I've been using as an example, you put down your 10% in making payments, and all of a sudden next year, you get the idea that I'm ready to put up my house. So I'm going to start building my home. But what happens if the lot's not paid off, you start to build your home, and then now for some reason you can't finish it? So you go into default. So the seller comes down to check on this property, and here he looks at the lot, and you've got some footings in there, some half-built home, and now what is he going to do with this? He could come out of pocket and finish it, or he thinks to himself, now I have to get rid of this in order to get my land back to where it's going to be sellable again. So that's why we put a clause in our seller financing documents that say normally you can improve the vacant land. In other words, you can have it cleared, you can bring in some fill, build a fence. But in order to go any further than that, the seller and the buyer must communicate. There's got to be good communication between both parties because both parties want to secure the value and the money that they put into the property, right? So it has to have good communication, and the seller wants to see that you'll be able to complete the process in order for his portion of the deal, because now he's basically donated the land in a sense, right? Because you haven't paid him off yet. So now you become true partners on this deal. So that's the answer to that question. But yeah, anyway, I truly believe in owner carry financing deals. I've covered the interest rate in the last video, why it's actually a good deal. Reducing balance loan, no penalty for early payoff. That's a bonus on these as well. What else? What else do I have to say about that? Very easy. All the money goes through escrow, so you're protected. The seller's protected. The buyer's protected. And yeah, okay. Yeah, that's what I wanted to say. All right, so I appreciate this. If you have any questions, comments, concerns, shoot me an email, DennisKii@gmail.com, and we'll go from there. Take care and have a great weekend.